What is good, my Forex robbery syndicate? It is your girl Jax back with another Forex banger, here to add value to your life, get you into profits quickly by teaching you today some support and resistance levels as well as trend lines. Now, if you don't know what this is, it's crucial you watch. If you do know what it is, it's crucial you also watch to make sure you learned it right. Now, without further ado, let's hop into things. Alright, now do me a solid, hop to tradingview.com. That way when I get done with this explanation, you will already be prepared to follow along. So what is support and resistance, for instance? I'm just going to start with the basics without us looking at candlesticks, which some of you may not even be familiar with. So let me begin by creating what is called an uptrend, and you'll learn about that a little bit later in this video. So in an uptrend, what you want to see is higher highs, lower lows, higher highs, lower lows, higher highs, and lower lows. It will not be perfect. You, especially while learning Forex, do not want anything to be perfect because no scenario will ever fit anything you ever learned with any other course. So here I am to keep it raw and real. What is support and resistance, you ask? Now, after this uptrend, downtrend, support and resistance often acts together. So for instance, what you'll see here is called resistance. You can treat resistance as a ceiling because for instance, if you were a ball and you threw yourself against a ceiling, what would happen? You'd probably react to it, resist to it, and bounce back down. Now here is what we would call support. So the peak, and then we go down to a valley after you react to resistance, which is support. It is supporting you. So now you continue forward, you break through this previous resistance, and now you find a new resistance. You test that, and then you react towards it, go back down. Previous resistance is now support because price has broke through it, found a new higher high, and then reacted to that higher high by retesting the low to ensure that the trend will continue. This is why this is one of the largest and widely used concepts in Forex. If you don't get this, you've got to rewatch this video time and time again until you do, because I promise this will lead to profits if you have thorough understanding and know how to actually draw this. This will put you in the Forex game for sure and have it on lock. Now let's go to actual values so you can see the charts. So if you've had tradingview.com loaded up, you're going to see some kind of chart. I'm playing off of USD JPY right now because it's currently 9.25. With the links I showed you in the previous video, if you didn't already look, what you want to look for is the Forex market hours. It was one of the last links in the last video. So right now, if you're looking at your time zone, for me, I'm in Eastern Standard Time, New York time. So anything past 7 up until 3 a.m., it's a Tokyo session. So I found this so you could see price react just the smallest bit. Tokyo session, it doesn't move much. But luckily in this example, what you're going to find here is price reacting to recent support and resistance level. Now, whenever you load up TradingView, I want to encourage you to zoom out. We want to get the whole picture. So this is what it may have shown you, but we definitely need to zoom out quite a bit until you really can't see much at all on your charts. Reason being, you want the entire picture. You want to be informed. See, this is too much, but you want to be informed enough to know where history is going to repeat itself. Like I mentioned in my previous videos, you look towards the past, so it teaches you the present. So here's a tip. Before we even continue, draw the most obvious levels. If it's not obvious, it's not worth your time. Now, number 2, start with top-down analysis. I'll go into that in a different video. But what that means is at minimum, start drawing your key support and resistance levels on a daily chart. Those are the most significant, and you can move down from there and color code them and sort accordingly. Alright, now here is an example we're looking at. We want to see the most obvious levels, right? So that's the next most obvious. Here's another in the middle. I would actually react to this most recent. Alright, and whenever you're drawing support and resistance levels, it's kind of a use to... Now here's another tip. Whenever you're drawing support and resistance levels, it's entirely a waste of time if you're drawing them all the way down here unless you're looking for months ahead forecasts, because price is already up around here. So what we've drawn so far services us in the present. You want to draw around here key support and resistance points to look for. Because if you're drawing down here, it makes no sense. You're not going to see that for a while, trust me. So here's another obvious level. Now you'll see, oh, they're kind of equidistant. Why is that? It's called market geometry, and like most things in life, there is some symmetry aspect you have to take into account. So like I said, just draw the most obvious levels. From there you can adjust with the most touches. I've been doing this a minute, so you'll see right off the bat, most touches are just going to be there automatically, but you can adjust accordingly. So these are the most recent that I would paint. That way you can see how price reacts to each individually. Now, being that they're daily levels, again, they're going to be the most significant, and then you want to do top down to see other short-term levels. From here, I would go to 4 hour, 1 hour, and then for me personally, I'm a binaries trader, so I go anywhere in between. If I'm not doing per pips trading, which is holding throughout the day, any period of time. You can even scalp per pip trading, but for me personally, I like a set time and a set value for money in minutes. Now moving on with this support and resistance. If you were to zoom in, current price, look how it's reacting. This was previous support. You could even move it up a little to edit it. And then this was resistance. So we can move this down. Now if you'll see, if we zoom in, like I said previous support has now become current resistance. Just like here, support in these areas became resistance later on before it broke, became support again right here. Broke down, became a semi-resistance to react up. Now if we zoom towards key values, we're going to see the following. This is current price action. Now because it's past 7 and between 7 to 3 Eastern Standard Time, this is a Tokyo session, which is why I picked this pair. The US dollar, the Japanese yen, meaning it's not over the counter anymore, it's live trading. So in this price, the Tokyo session, as I mentioned, doesn't have much action currently, but you'll see that it's operating within 2 support and resistance levels. Now it may not be so clear to the eye, but what I look for personally is over here wicks, lots of wicks. Wicks are kind of the key here. Look over here, another wick down. What was previous resistance right here is now support. Another test before a breakthrough. Here another resistance. Quickly became support, testing that level again, fell down because it tested right here, another resistance level, failed, broke all the way past this for failing, uses this as support, wick, lots of wicks are gold in our eyes, only to blaze up, and this is why I like this level right here, which our current price action is testing, but I'll tell you why. This level right here, you see this large green bar? It basically inferences that there's huge price action. We like a sharp move. We like lots of price action. Only to test a particular key level, especially a daily one like this, only to be rejected so quickly in a sharp move back down. That's beautiful. That means it's a very strong level of support and resistance. So we continue breaking through. It then tested the next level. It had to go back down because it failed. It retested this level and it still didn't like to go back up. Now this level that it retested was previous support once it finally broke through in its strong move. Tested the last and then came down. So what we call this is the high of the day. And other than that, that's pretty much all it is. It's a key level of resistance so far. Nothing has surpassed it. That's something you want to look out for. It's kind of significant. This happened in March of this year, 2021. So that tells you something. We haven't surpassed it yet. We'll see how this goes. Now, where we're at currently, we already retested the previous level. It failed and we did a sharp move back, almost equidistant to this candle, but a little bit longer. Continued down, tested this level, but not quite. Came back up. Now we're in limbo. Now there's two ways to trade this. It's basically the bounce or the break. Now the bounce is when people buy when it falls towards support being a bottom level. So it bounces from support and you buy after sufficient confirmation, of course, in whatever time frame you prefer. Or it goes towards resistance and then it bounces from resistance back down after sufficient confirmations that you're comfortable with in whatever time frame you so choose again. Now the break is whenever it breaks up the resistance. Now say this were to break this resistance, I would look for it to at minimum break these 3 wicks. So here at about 109.944. So it does skimp your profits a little, but there's what's called a false breakout. Now any candle that doesn't close beyond a significant previous level wick is considered to be a false breakout. If it does close beyond that, and close meaning there's a timer here telling you whatever time frame you're using, that's the expiration of the candle. So this is a daily chart. It still has 19.5 hours to go. For instance, if you were to go down to a 1-minute chart, I'll show you here. This one singular candle has 30 seconds to go. So it just depends on what chart you use. So for lesson purposes, going back to the daily, we're looking towards these 2 key levels right now. You can either trade, if you trade by pip, the bounce or the break. Now I could break down how you do it in binaries as well. These are significant key levels. What I do for binaries, I'll look on a 1 minute. Zoom out. Let's color code this a different way just so we don't get confused here. We will go a pink. Okay, why not? All right, now these are binaries levels. I would look to see, depending on who you are, a bounce or a break trader. In fact, I'll give you a little secret right now, but I want you to practice. You see these wicks? Boom, I was going to tell you it's going to fall. So these wicks were testing not only this level and rejecting, but the secondary wick tested beyond this, respected this previous level of support and resistance, and then fell strikingly. So you want to see, with a larger move up, it reacted down right here. Another force up to test this level, previous support, now resistance, only to fail. It comes up another time, and it rejects it. Now once we learn in Japanese candlesticks, the next video, hang in there, trust me, it's worth it. This is what's called a doji, in particular a rickshaw man. This is strong signal of indecision. Now we don't work on indecision unless you're more advanced and you know what else to look for in the past tense. So if we're at this current level, here's a secret, and you look at this past tense level, I would sell anywhere under this candle because it's tested this level twice, double top, technical double top, and I'll teach you about this in the next pattern and Japanese candle video, that this candle did not close above either of these double top wicks, validating a double top. It came down, retested the level overall, failed, I would sell right about here, which is what I was showing you live before this massive bar down. That would have happened and you would have made whatever you wagered in a minute's time. Isn't that the craziest thing alive? This is why it's so crucial you have to learn support and resistance. So look, here's another key level formed. It's particularly important when there's 3 touches. We already had 3. Here's a 4th that rejected. Let's move this. All right, so you just rejected this, what is now support. What's gonna happen next? I wager it's probably gonna check this next upper level where that was its own resistance in this movement's right. You see where that wick is right here? I wager it'll come about here before we sell it. Let's see. I'll color code this and then we'll speed things up so that you can see if I'm right or I'm wrong. And then we will go into advanced later. See if it touches this yellow, maybe goes a bit above about here, and then it'll womp back down. Within a minute to 2 minutes time, you'll see. So that was the example that I was talking about. This is some advanced material you can look forward to and make massive profits in a minute's time. Look where I was saying about here with this last wick and previous wicks, the bar almost immediately reacted downward. I'm glad you got to see that live example in the Tokyo session. That way we can move forward with trend lines and trend channels. At the end, I will show you exactly how to practice all these concepts so you can absorb it yourself. And I will also give you my email address. That way you can send me all your marked up charts and say, hey, teach, or please call me sensei. Am I doing this right? How should I improve? Are these key levels right? How can I do this better? So what I just showed you is not only how to very top down analysis what you should do, and I'll show you top down analysis in depth in a further video where you can go from daily incrementally down to a minute like I did it in that much of an instance. So now that you saw that very sweet example and why this is so beneficial to you, let's look here. What we're gonna do is draw ourselves some trend lines. Now this is dating back to what? March 2020. Sharp down move, obviously, because this was the coronavirus pandemic dating about from February. Boom, beginning March, drop. Goes all the way back up because we handled it a little bit better than Japan, unfortunately. So the US dollar, this pairing was actually very strong against Japanese yen. And we started in a downtrend all throughout until January 2021, the beginning of this year. And it seems we're in a slight uptrend. So here's the reason why I show you this. You want to catch some of the lows. Let's see what kind of trend we're looking at here. So I like these, and I'll tell you why. A lot of people do it at the very bottom of all of these, and you could. It would be valid. What you need is 2 significant points of touches for you to draw a trend line. What you need to validate a trend line is 3 significant points. Here's 1, 2, 3, 4. If I were to tighten it up like I prefer it, here's what I would do. I would get all these wicks. You see all this action in here? Now, I'm not sure if you see why, but I like 1, 2, 3. These come close, almost. We'll count this, I guess, and skip this. 4, 5, 6, 7, 8, 9. I think a potential almost 10. Let's see. 11, 12. Now these candles, though they drop through the trend, that just means that it was a breakout to test this trend, and it broke back in, validating the trend and making it even stronger. Now this is broken out, and we're going to see how it reacts. But if you were a normal trader, you can easily do this as well. It would fit constraints easily. 1, 2, 3, 4, 5, 6, 7, 8. So we'll just do normal trend lines for now and follow up in an advanced series. What you want to do on a daily, just do Control C, which is copy, and Control V, which is paste. They'll be the exact same line, and you can move it around to fit exactly your trend and what you need. So advanced series, this is exactly how I would place it. This was a breakout, and that's about it. It fell back in. This is still valid. So if you see a trend line, you can kind of just do buys, 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 buys. If only say, see that example, buys, 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 buys. And it's so valid. It's a very strong method. What makes this even more advanced and a little bit more affirmative of if you wanted to take the opposing position, use the opposing trend. You don't make the market fit your lines, you make your lines fit the market. If you're making the market fit your lines, you're going to be wrong and you're going to lose a lot of money. So let's see, it looks like right here it's testing the significant level just like I told you in the scalping, and it'll probably continue up. It's going to retest this uptrend and go upward. You'll see, especially if you watch this later on and check your own charts after this date of upload. So 1, 2, 3, 4, 5 whenever it came back down and tested outward, 6, 7, boom, 8, 9, 10, 11, 12, 13, almost 14 and 15. So it seems like the trend's weakening. And whenever you make a trend shift, generally it happens over time. It's not just going to be a sharp whomp. It's very rare. And whenever it is, some sense of market manipulation. So now that we copied not only just a trend line, we pasted it. And that means this is now called a trend channel. It's an uptrend channel or an ascending trend channel. Meaning, whenever it pings around these points, you're pretty safe to take a trade. Now if we zoom here, say for instance it pings down here and it goes up. If you identify previous support and resistance levels, which are these black lines on the daily, you would see that here on this previous resistance, now support, and then resistance again level, plus this uptrend line, that gives you already 2 points of confirmation beyond anything else you're going to do. You would also get these wicks afterwards, and then a boom, drop. This happened over several days, so if you're a per pips trader, you could really cash in. If you're a binary trader, I'll show you exactly how to do this as well. It's the exact same thing. You just do it on a smaller scale. So let's hop to that. Why don't we? We'll go on like a 5-minute chart. Why not? So you want to zoom out. See, it's been testing this bottom for a while. Before it picks up, it looks like it's gaining some traction now. So it's kind of trading sideways on a short term. So here and here. So let's delete this and look upwards. Because it's been testing this last bottom trend line for a while and it's going upward, it's pretty much just trading sideways. If it's ascending, which is an uptrend, you would look for more of a steep incline, say something like this. And these bottoms, upward. Now this is another valuable lesson. The steeper it is, the more unreliable the trend line is. The more incremental, the more reliable, you see? That means it would happen over time, but you can't just move your line wherever you want. You have to know how to draw it properly. So say for instance, you need 2 points to start a trend line. I don't even like drawing it towards the wicks. I like drawing it towards the bodies of the candle because wicks are pretty much impulsive moves throughout the market. Now you already have 1, 2, 3, 4, 5, 6, 7, 8 touches going downward. So if we were to just do recent, you could totally do this on a 5-minute. Let's draw, let's draw our parallel on this binaries as well. Oops. Now what you want to do, Control C if you didn't know that copies, then Control V as in Victor, that pastes. And now you just do your trend line downward. Because it's a trend channel like this, I would move it tighter here. You see where all these wicks are? That means impulse beyond, impulse beyond, impulse beyond. However, they all close above this trend line. You could even extend this if you wanted to further validate. It's entirely not necessary. Now you can see the constraints in which if you had a center line, it would probably bounce, bounce, break, retest, boom through, bounce, break through, retest, boom, there you go. So you see it pings off all these times. These would be massive opportunities for very short-term sells. On the lower end, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So if you wanted to be safe, being that this is a very short-term downtrend, if you were trading on pocket options or any other binary broker versus the per pips brokers, you would see that this is a short-term trend you could follow. However, we hop back to the daily. Overall, it's an uptrend you must respect. Now let's go back to the 5 minutes so I could further explain. Alright, so we definitely reacted to this. One of two things can happen. There's probably going to be an equidistant mid-channel, but you could actually learn how to draw Andrew's pitchfork, and I could actually teach you if you so choose in a different video, or I'll probably just put it anyway. One of the many different technical analyst tools. We're looking at the center somewhere around here. Look how reactive these points are. Let's go here. Now it seems like it's broke the center point, the midpoint, but not by much. One of two things can happen. If it breaks significantly, like say past this previous high and low of this last high and downward formation. If it breaks past about here, I would say it's going to continue for a retest to this line and go upward. For your binaries traders, of course. Now, it could test here and it could reject. Now, I'll teach you all about these patterns later that you want to learn about. It's actually in the next video to see common reversal patterns, be it single, dual, triple, etc. in Japanese candlesticks. That's why I love this so much. You know these basics like trend, support and resistance, and you learn your Japanese candlesticks, you're already off to the races and more profitable than most traders out there because they don't know how to draw any of these levels correctly. Now, you can keep these levels, go even lower. I like to trade 1 minute trades. And it'll really show you some sweet entries because 1 minute trades, if you drew this on a 5 minute, it's pretty respectable and you'll most likely win. Now you can tighten it up here. You see like this for instance. This wick, it'll give you more accuracy. You see about right here, that test, this test, these wicks, this upward test, this almost upward test. Now it's testing this, boom, it rejected. So it makes more sense. And the 1 minute, what I love about it in binaries and any other even per pips trade, I always zoom in to find the perfect entry. Nothing other than this chart will show you the perfect entry, because you can really zoom, find the exact value where it's going to react. Look, this is even a double top on a minute chart, and boom, back down. So this is pretty much the essence of support and resistance channel. What I encourage you to do, make a TradingView account if you haven't already. I'll link the TradingView tutorial down below. That way you have reference material for how to use it and how to set it up if you so choose, if you have not seen it already. Now, my recommendation, once you do so, let's just go to any pair. Say GBP, JPY, that's another Japanese yen pair. So it is technically live. Let's go today. Look, it's actually, I had a previous level that I drew. Now keep in mind, these lines and levels that you choose, they're not precise, they're areas. So it's currently reacting at an area of support and resistance you need to pay attention to. Now moving forward, self-study is always important in any craft. This is a market high, so I say pick any currency pair you so choose, and just practice every single pair. You see this long list? Do it for each and every one. I dare you. Once you do this ample amount of times, you're gonna see your profits fly sky high. Why? Well, number one, you take pride in your craft, you love it, and it's something of value. Now, aside from that, practice makes perfect. Now, once you see these values, boom, they're near perfect. Another thing, again, equidistant behavior is not uncommon as the markets fit market geometry. You see how almost equal those lines are, and I'm just eyeballing it? It's crazy. These are very significant too. Again, if I zoom, these are levels where I see potential resistance, 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 resistance rejected, fairly close above there, and that's when it flew up, tested the next level. It became support, flew up, tested again, became support, came back up, if you see the green candle just slightly, and boom, it broke through. From here, the next level would probably be something like here. So you see this wick, just for this example purposes, I drew it this low. Normally I wouldn't. So here, broke through, retested, is now resistance. Came back down, whomped through, all the way up to the next levels, came down, support, whomped through again, resistance, whomped down, all the way through previous support, 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 look at all those wicks. Boom, tested this previous resistance. Right here you see these wicks. So it's fair to anticipate this to come somewhere around here, as well as these values later on. Came back down to previous support, whomp, back to resistance, and so on and so forth. So I encourage you to take these charts, mark them up. I will take time out of my day. Email me, please flash this on screen. thelavishmecca@outlook.com. Send me screenshots of your charts. All you have to do, TradingView, press this button. Send me all these URLs. Copy, paste, and then you can see exactly whatever you did. Put that in the email. Say, hey, are my support and resistance levels right? How would you do it? How can I improve? And I will take the time to review and get back to each and every one of you, I promise, because I want you guys to become profitable. It is so crucial you get these very fundamentals. Everything else, just extras. All those dumb indicators, these calculations, all these retracements and other garbage. All you need is eyes, because later on, like all these lines, I just naturally see. And then it may seem busy right now, but boom. Later on, you will see this naked chart, and all you will see with your own two eyes is levels of support and resistance, and more importantly, what that really means, cash money, these profits, okay? As always, it's your girl Jax. I hope you found some value, and it is crucial you understand this lesson. Rewind, do whatever you need, get it down. Please practice on your charts. Please send me those emails. I will take the time to review each and every single one because I want you to line your pockets fat with profits. You can't do that without this lesson, and furthermore, look forward to the next video where we learn all about Japanese candlesticks, one of the most crucial components to trading as well. Quick reminder, it is absolutely free to like, comment whether good or bad. We always appreciate the feedback regardless. Subscribe, and then click that little bell next to it. Select all to turn on all post notifications. Now, this is also to your benefit because it enters you into our monthly giveaway every last day of the month. We greatly appreciate you. It's such a humbling experience to be by your side, watch you grow, as well as grow as a personal trader even after 9 years teaching you guys. I appreciate you, wishing you all the best, and I'll see you very, very soon so we can learn some Japanese candlesticks together.